KEI Industries, that's the other one in focus. Anil Gupta, the CMD, joins us on the show right now to talk about their quarterly performance. Anil, hi, afternoon. Just walk us through what the quarterly performance has been like, what impacted your revenue growth in Q1.
During Q1 of 18-19, KEI has achieved a net sales of 884 crore and registering a growth of around 13.62% over the corresponding period in the last year. And profit after tax has increased by 17%. We have registered a volume growth of around 17% in our sales of cables, and significantly the retail growth is around 55%. Revenue is slightly less because we could not dispatch 50 crore worth of export orders due to non-clearance from the customer due to site conditions. All those cables has been dispatched during July. So, we will be able to cover up marginal sales deficit during the second quarter.
Has the volatility in prices of key raw materials impacted margins? What's your outlook on price hikes?
We have not been impacted by any price increases in the metals, because I have been maintaining that we are maintaining adequate stocks and the metal position to cover up all the orders what we are in hand, and we are doing pass through of all the raw material changes, whether decrement or increase in the subsequent quotations which we make to the customers. So, we are not impacted by any price rise.
Order book B, and what orders would you say are currently you're an L1 bidder in?
We are already having a order book of around 3,000 crore rupees, and out of which almost more than 500 crores are export orders which have come during this financial year itself, and we expect to have a export growth of more than 25% overall in this whole financial year. In EPC side, we have a L1 position of close to 1,200 crore rupees in the EPC and extra high voltage cable turnkey orders, and we hope that we will be able to exceed the guidance which has been given in my earlier talks to the media. Also, both the divisions EPC and EHV should register a good growth along with other verticals of the company.
Take us to the segmental growth outlook. Will cables continue to remain the highest contributor to revenues, or are you seeing your products mix diversify?
Cables continues to be the biggest revenue earner for the company. Our focus is mostly now on shifting a lot of sales through retail through our dealer network, and our growth in the house wire segment is significant. So, we have, as I have said, that we have registered a growth of around 55% overall in the retail side in the first quarter. We hope to see a 35 to 40% growth in the sales through retail network or the distribution network within this financial year, and aim to take the sales to 40% of the company's turnover through retail network in this financial year. That is our efforts, and hope to achieve that.
Will the EHV cable segment double its revenue as per your previous projections?
Can you repeat your question, please?
Just wanted to know whether or not the EHV cable segment double in revenues rather, as per your previous projections, and if volatility in the currency rates has hurt your exports this time.
Yes. No. Yes, EHV revenues will definitely double this year compared to as projected, and we are not hurt by any exchange rate variation in the exports, because depreciation of rupee is positive for exports, although it is negative for imports.
We are seeing high competition within the electrical cable companies. What is your strategy to mitigate competition?
We are, we are keeping ourselves little away from the normal electrical cable segments. Reason is that we have a very strong retail focus and export focus. Secondly, we are supplying significant amount of cables to our own EPC contracts. So, our institutional sale is to the other EPC contractors or government departments through tender is not significant, and that is that we are maintaining to ramp up our capacity utilization. So, our margins are quite well protected in our own contracting division as well as our exports and retail network.
Okay, great speaking with you. Thanks so much for taking the time out and highlighting what you've done in the previous quarter, what you intend to do going forward as well.